Hey guys, so today we're talking about order blocks, and I want to give you guys a very good sense of when to use order blocks, what order blocks are, how to incorporate them into your trading so that you can, again, take higher probability trades and just improve your overall trading strategy. So let's start with just some theory as always. What is an order block? So this is just foundational stuff. An order block is the last up candle before price moves down. So that would be a bearish order block, or the last down candle before price moves up. So that would be a bullish order block. So just to give you a good way to visualize this, we have here a price leg moving down, price retraces into this area here, which is actually a bearish order block. It tries to go lower, and you see this down candle here, this bearish gray candle, is the last sell candle before we get a structure shift to the upside. Price then retraces into the area that coincides with this last down candle and then expands away. So the order block, in this case a bullish order block, is the last sell candle before bullish price action. In this instance, this is a bearish order block, which is the last buy candle before sell pressure. So order blocks are essentially blocks of price that you can visualize as a candlestick on a chart, and it's as simple as that. The last up candle before a down move, the last down candle before an up move. Very simple. This can be expanded somewhat where you can look at a series of candles that create a zone of resistance or support, which make up more than one order block. But for this, the way that we're going to treat this today, the order block is that last candle. And why do order blocks form? So really it's about the fact that large scale institutions that actually move big markets like forex markets, they obviously need a lot of liquidity. They need to accumulate large positions to make the trades that they the trades that they place make sense. And so essentially they are using points around things like old highs, old lows, where price is expected to move, maybe reverse or continue, to accumulate as many positions in the market as they can. So they do this by almost like consolidating the market, by making fake moves up or down before the actual move, in order to entice traders into the market that they can trade against, essentially. The important thing to note, and why order blocks are very powerful, is that, as you see in this example, and we'll go on to tons of examples in the charts, order blocks, when they get respected, they often get mitigated, which essentially means they get traded into before the actual move. And this is why this happens. So if institutions are accumulating orders here, price will then move away and then retrace, because if you're an institution buying here, you don't want to place all your orders necessarily at once, because if you did so, you would move the market aggressively to the upside straight away. So what happens is institutions, or the actors that are moving these markets, will place orders here. Price will start to move away. Price will come in to mitigate this area, which is essentially the lack of initial buy pressure that then draws price back to this zone. And then these institutions will place more orders, and they're ready then for the move to happen. So they're starting to scale into their positions. And as such, like, our job as traders, as retail traders, we're never going to be anyone that is moving these markets. But what we can do is see, where are these orders being accumulated? Where are the right conditions for us to place trades? And we can just piggyback on these moves. So order blocks essentially mark where there are left unfilled orders. And as I say, price often returns to fill these, and that's why they're powerful areas that we can look for on the charts to actually place trades from. So how to identify order blocks? So if we are just to take any price action, first and foremost, I'm just going to actually clean off this chart. So if we're saying that the order block is the last candle that trades in the opposing direction to price action. It's quite easy to start marking them. So we can see here is an order block. So we're on the 12-hour time frame. So I'm going to mark here a 12 order block. And essentially this is, as you see, we have a sell candle that then creates buy pressure. Then this gets traded into, as we just talked about, to create more sell pressure, to create more buy pressure. So we get another 12-hour order block. Price moves away. We get a retracement, creating another sell candle. This is another 12-hour order block, and then price moves away. Same thing happens again. So the last sell candle before we get buy pressure, the last sell candle before the buy pressure, there it is. And then eventually the order block gets disrespected, gets traded through. And as soon as that happens, it then creates a bearish order block in the opposing direction. And this is the last buy candle before the sell pressure. You then get another order block here, which actually gets traded through. So on all time frames, you'll see manipulation through order blocks. But actually what ends up happening, we'll cover this in a bit more detail, is a new order block is formed, which then creates this, this down move. So you see this order block here, price retraces into to create this order block at this level. So we go down, this eventually gets respected, and that creates the substantial down move, that substantial swing in the market. But in terms of just marking order blocks, it's as simple as that. When you see a last sell candle before buy pressure, that's a bullish order block. When you see the last buy pressure before sell in the opposing direction, bearish order block. So hopefully that makes sense. So how to trade order blocks? Hopefully it's already obvious. But not all order blocks are not created equally. Some order blocks get respected, they get mitigated, price moves away, and price does not come back to that level until some other higher time frame context forces price in that direction. But sometimes order blocks just get traded straight through, and ultimately you just get stopped out of trades if you're wrong. Straight away I can see an example of this here, whereby you've got an order block, price moves away. See, actually it gets manipulated straight through. So if you had an order here on this order block, even if you had short-term targets, say, I don't know, 2 something, price moves away, comes back, manipulates the low, it would stop you out of this position before you're making the move. So order blocks get traded through all the time. So in order to trade order blocks effectively, we need a couple of things. We need confirmation, certainly, and we need higher time frame context. This is really important. And I talk in other videos about the importance of trading candle ranges, trading from key levels or key points on the chart. But order blocks are often the way that you would or one of the ways that you would actually execute a trade. But using order blocks in isolation is never going to work. It's never going to create you a successful strategy. They need to be used in conjunction with higher time frame context and when you have confirmation on a trade. So I'm just going to show you, for example, in the last, this is looking at USD CHF, why this particular order block causes down move. And it's very simple actually. I'm just going to overlay these higher time frame candles. So multi-time frame analysis is very important. You always need to be trading higher time frame candle ideas and executing on lower time frames. What we have here is a monthly candle. We just keep this as simple as possible right here. So you can see throughout the month of July, this is the way that price traded. This is the entire range of price action for the month of July. And what happens is we are in a bullish trend. So the order blocks that I mentioned are being respected. So this is the rough structure of the market. We trade up we come into this level, and then what are we doing at this exact point? When we make this high, we are essentially liquidating. I'm just going to actually mark this so that we can see it clearly, and I'm just going to add it to the monthly chart as well. So this area right here is the high of the monthly candle. Price liquidates the high of the monthly candle and then shifts structure. And what it does in doing that is creates an order block. So in this case, a 12-hour order block. So when price trades back into this area, you get one touch here and then actually some manipulation through, and I'll talk about why that actually happens in a second. Fundamentally, this order block is not the same as other order blocks that you're seeing on the chart, this area right here, because it's an order block that swept liquidity above a previous candle's high and forced a change in structure, change in market structure. So when we talk about what we need to trade order blocks, higher time frame context, did we take liquidity or sweep liquidity above an old high or an old low? Yes. Have we had confirmation? Have we seen a shift in structure? Yes. So this would be a perfectly valid short opportunity. And we're not talking necessarily about how to trade entire candle ranges in this particular video. But if we are to manipulate this high, we're coming off a bullish candle, and this monthly candle is to close below or inside this candle's range, then the logical next target for price is the low of this candle. And so you have there, if you're able to get in and hold this position for long enough, a very, very good swing trade, 3.81R trade. Now, within there, if you don't want to trade that higher time frame, what you'll see here is just manipulation, but it makes sense. So if I just now we know what's happening with the monthly candle, take that away, and what I'm leaving here is the middle time frame. It's a 1 week candle. So the exact same thing is now going to happen, whereby we have a weekly candle, as you see it right here, and the low of that candle is not taken. So what happens is price manipulates the high of the candle. So in the exact same way, price sweeps above the weekly candle's high. So now we can say a weekly turtle soup. So now we have an order block that came from, let's mark this again, bearish price action. Then we have a shift, bullish price action. So if you're just trading the order block, you're looking at longs. But what happens? We sweep above the weekly high. We have the monthly candles context, and we create a new 12-hour order block. So now we have a new order block, and I'm just going to mark this again so that it is extremely clear. Take your time over this because it's important if you want to incorporate order blocks into your trading strategy. So now we have a new order block. We have the same target because price is fractal. It's not doing anything different. It's the same story across time frames. But from a shorter term perspective, we have this weekly low as our shorter term target because we have candle 1, candle 2 manipulates and takes liquidity above the high. We have a shift, we have confirmation, and so we can take a short from this order block to target the weekly low. So that is a more refined swing entry. So again, we're talking about if you want to hold for the same target, now you have a 4R plus trade, or if you just want to take off at the weekly low because you want to see what happens, you've got a 1.25R trade. What you can then do as well is just follow this. So new order block gets created. Again, if you wanted to short off this order block, cover the high. So it's the last buy pressure before the structure shift, and cover and target the low, 5R trade. So you're just literally tracking what's happening in the market and understanding where order blocks are created, where they're going to cause resistance or support in the market. You're playing these higher time frame ideas and you're taking swing positions. So that is how to effectively trade an order block. Before we move on, I want to show you something similar using Bitcoin. So this was something I actually called on X. You can go back and take a look. Trade I placed. You can see how the R multiples actually get more aggressive. So if you look at Bitcoin, here we have a there is the monthly candles low. So price sweeps below this monthly candles low. What you can see is that it's already taken the high of this market. So there's no reason really for price to sustain. It's not liquidating this candle and this candle to take the high because the high has already been taken. So that's the first sort of clue as to what's happening in this market. And then what you see is that price at this point here liquidates the previous candle's low. And we do get a structure shift. We do get a structure shift here. But knowing what we already know about how markets trade and how candles relate to each other, there's still reason to believe that price may sustain in a bearish fashion. And if we just take away the monthly time frame and we just look at the weekly candles to see what story they're telling, we can see that price has already swept these weekly highs. So it did so right here. And if you just take the previous candle, we can see right here that we had this candle and then a corresponding candle that closed below the previous candle's low. So it's not like it's not as if price did this where it swept below, we saw a change in structure, and then there's reason to believe we're going higher. Instead, what it did is came up and then it started to trade lower. And I'm just going to actually make that more explicit for you by showing you this is the low and this is exactly where that candle closed. So we have a bearish candle. So if we're to track the order blocks here, if we have the last sell candle here, no shift in structure, so there's no valid order block, then we do get a sell candle here, but it doesn't trade below this specific candle. So we're getting some sort of like consolidating price action to pull back. But then what do we get? We've got bearish candle, we are still anticipating lower prices, and we just get a new bearish order block printed right here. Let's just bring this to the front. Okay, so there's the order block, and then what we get is we trade into this and we get another 12-hour order block. And then what happens is just price follows. We're just getting this price action, if I zoom in, whereby price came off this level. We haven't swept below this low, so there's no real reason at this point to go higher. We then get a shift, bearish order block. If we want to then wait for confirmation, we get confirmation in that this order block has driven price lower. So now we're in a position to trade from this order block. And this order block is then what creates this massive swing move down. And I called this on X. So right when price was right here, I wrote this thesis that said this is why I think Bitcoin is going to stay bearish. And this is the point of price, the order block that I think is going to be respected to go lower. If we bring up the monthly or even 3 monthly chart, you can see the higher time frame targets. But if you just held this trade, it's a substantial short-term swing position that drove from one specific order block multiples above 3R. So again, what you are doing when you're trading order blocks is you are always incorporating higher time frame context. You're never trading order blocks in isolation. You are waiting for either higher old highs and lows to be taken, or for continuations based on candle closures. And then you're always waiting for confirmation that an order block has formed and it's the right area to take a trade from. We're going to cover other types of trading zones like fair value gaps, breaker blocks, swing points. So order blocks are not the only place that we'll take trades from, but they're one of the places within a price leg that we can take trades from. Common mistakes. So it's essentially doing the adverse of what we've just talked about. You should never use order blocks in isolation for the reasons that I mentioned. If you ignore things like liquidity, and what I mean by liquidity is old highs and lows where orders have formed which price can manipulate. If you're buying or selling from those levels, more than likely you're going to get stopped out. If you're not using multi-time frame analysis and comparing time frames, that's a big problem. If you're not waiting for confirmation. Another massive one, especially when you're trading swing positions, it might look as though a candle is going to close in a certain way. So for example, if you take this down close candle, at some point in that specific candle, it would have looked like a very bearish candle. And if you didn't wait for the candle to close, you could have marked that prematurely as the order block. But actually price then trades back and closes. So it could be that at this point, all else aside, price just continues bullish. So you have to wait for candles to close in order to mark order blocks. You also have to wait for order blocks to form in the right way, whereby you get that confirmation of a move. The other thing to consider, which we're not going to cover in great detail right now, is waiting for order blocks to be mitigated when there are other points of internal range liquidity. Like I mentioned, it might be a breaker block, a fair value gap, which is where you should actually be trading from in a price leg, and actually just miss out on a very good move that you've fully mapped and understood because you're waiting for an order block to be mitigated, when actually there are other places within that trading leg to take advantage. So that's essentially a whistle stop tour on how not to trade order blocks. What I also want to show you is how order blocks form on all time frames, and you can use higher time frame order blocks to frame lower time frame trade entries. So for example, if we look at, let's take the weekly right here, and if you were looking at the weekly, then instead of looking at the 1 month, you might want to look at, say, like the 3 month potentially to start seeing, okay, what's happening here. We can create a very quick story with Bitcoin, in that if you see on the 3 month chart, we had a 3 month liquidation. So this candle here was traded through, and you can see we actually did create a bearish weekly order block. So the last weekly buy candle before it was traded through. However, if you look at the 3 month target, it's already actually taken. So the base of this candle, if we're to liquidate this candle to target its low, it's not valid because the actual low of the candle has already been traded through. So there's reason to believe that actually this is just manipulation to go higher, and that's exactly what happens. So price then trades higher and we get a weekly order block. So the last sell candle before the buy pressure. And then it looks as though we're going to create another weekly sell candle to go higher, but actually this weekly candle just sweeps and then reverses. So as we're reversing and we're coming down here, we still have a bullish price action. We've already taken the high of this this candle. So there's reason to believe that price is going to sustain, and that's what ends up happening. This weekly order block gets respected, creating another weekly order block right here. So price comes in, trades higher, creates another order block here, which gets traded through, and then eventually you have your bearish order block, which is right here, and this creates another bearish order block right here. So just to make that explicitly clear, price comes down, trades through, creates a new order block, price trades up, last sell candle before buy pressure, comes down, higher, last sell candle before buy pressure. Instead of being respected, it gets traded through. We have now the last buy pressure before the sell action gets traded into, and then we get this move down here. So when we were talking about how to trade the lower time frame on Bitcoin earlier, this would have come into any thinking that we're actually reacting from a bearish weekly order block. So this happens on every single time frame. If you look, I always show in my videos clean charts, but I have everything mapped out: weekly, 2 weekly, monthly, 3 month, 6 month order blocks. I always execute using 12-hour time frames or 6-hour time frames to take swing positions, but I'm always monitoring higher time frame order blocks, and I'm always monitoring order blocks on lower time frames and looking for reaction points where it makes sense to get involved. So that's a whistle-stop tour of order blocks, what they are, why you should use them, how to trade them, how not to trade them. We are going to go into more detail, of course, and run through a lot more examples on this, but this is good foundational content for you to start actually plotting order blocks on your charts and trading from them.